as a series of indicators, of stable indicators per se, you notice that the class that is actually segmented into 5 series. The reason why it's 5 series, I can tell you one thing, that we'll be covering extensively on all the stable indicators that's inside the Homely software. So by understanding that these are stable indicators, which this first series, a lot of people will take it for granted because you saw it's 1 star, you think it's like, no, it's a very easy class. I think I'm not going to attend it, or neither I will actually watch it, or I actually probably won't even rewatch it. Actually, I can tell you the first class is the most important, because the first class will essentially highlight the point where it tells you this is a stable indicator. So your behavior and how the way you perceive and your expectation towards this particular indicator will totally have a shift of paradigm, that you see that, hey, this is a stable indicator. So definitely I cannot trade with it. If I trade with it, definitely I cannot be, achieving the results that I anticipate it should be getting. I'm talking about maximizing your profit, so far and so forth. All right. So moving forward, suddenly got so many members coming in. Today you guys are quite free. I think earlier this month I'm supposed to conduct a session of a class in relation to chart pattern for the US market series, but I was caught up with work last minute, and then after I couldn't conduct the class. But nevertheless, be rest assured that the class is a continuation class. So therefore, I will conduct the class in continuation. Hopefully, I will be able to find more time next month. Then after that, we'll continue on these 2 series of class. Okay. I will also try to, do a market review for this particular, probably on the alternate month basis instead of the monthly basis, because of a time constraint. I'm caught up again by my full-time job now. And then after that, the other thing is that, the reason why the market analysis is important is because I think I shared a little bit of a limelight of what is going to happen over in December. Okay, I conducted the class and I give you guys a very brief explanation out of it. I don't know whether the video is still there or not. If it's still there, then you probably can try to go and watch it. If it's not there, then maybe you can ask some of the senior members that actually attended the class. Okay, that actually attended the class. All right. So moving on forward. First outline for today, we're covering what is a stable indicator. All right. More often than not, a stable indicator implies that it is a lagging indicator. All right. By means of lagging, it does not mean it is bad. It means it is steady. All right. It means that it is steady. All right. So there is a fact that each trader or investor has to accept. Basically, I'm trying to tell you guys that accept the fact that achieving the maximum profit with the ideal indicator still remains as a myth. So basically, I'm trying to tell you over here is that stop chasing after the pot of gold at the end of the rainbow. Okay? Does everyone understand what I just said earlier? If you all understand, no good, KDJ is best. You say no good, KDJ is the best, meaning what? You're making money or you're not making money? I'm trying to comprehend what you have just typed over there. So now, I just asked a question earlier. All right. I think who is that? That's Jennifer, is it? Yeah, Jennifer, your video is on. Okay, there is a fact that each trader or investor has to accept that is achieving the maximum profit with the ideal indicator still remains as a myth. So basically, I'm trying to tell you there's no ideal indicator that actually helps you to maximize the profit. All right. The reason why I say this is because every asset is unique on its own. I'm talking about, even let's say, for example, you talk about equities. Equities means stocks. Every counter also has a different behavior. Hence, the different kind of patterns when the price actually climbs up. Okay. So this is the part that you guys actually have to really begin to understand and accept at the same time. So what I'm trying to say over here is that master 3 methods, or maybe identify several patterns and master several indicators. Be really, really good at it, and it will help you a long way. All right. Don't be too abstract trying to chase this method, that method, chase this method, chase that method. Because the truth over here is that I give you one example. Okay, you only have one pair of hands, all right? And you can only hold two things at a time. But when you try to grab more in the process, you find yourself to be in the trouble to be able to handle things after that. All right. So what I'm trying to say over here is that there's no ideal indicator, basically. Sorry to shatter your hope over here, or whoever that's watching here for the first time. I'm here to tell you this, there's no ideal indicator per se, because it is actually a myth. But the thing over here is that knowing how to use the indicator very well would be the most ideal situation for you, all right, at the right time, at the right place, applying it in order to achieve the best result out of it. Okay, and this is very, very, very important. Okay, so why Homely Rainbow? I'll talk to you about it shortly in detail. Okay, does everyone understand what I'm trying to say so far? If you understand, type the word understand inside the chat room now. Okay, I think a lot of you probably when you saw moving average, you also like, hey, what can we talk about moving average? But let me tell you one thing. Out of 10 indicators we have in Homely, majority of the indicators are all very heavily related to moving average. Okay, although they pair with certain details of signals and everything in order to what do you call it? If I may use the word, is actually they try to illustrate it better to the individuals that's actually trading or investing, so that this is a very clear signal. You don't have to actually guess anymore. You can actually just close your position entirely per se, all right, or you can actually close partially per se as well. But the thing over here is that how many of us actually know that that indicator is actually a stable indicator, or in other words, it is a lagging indicator. All right, so these are the things that you all need to know. All right. And by means of it being lagging or stable, it does not mean that it's 100% guaranteed that if, let's say, for example, if it's completely all the way down, then you know that it's close short per se. All right. So this is the part that you all actually really, really have to understand. And I keep emphasizing over and over again. All right. So moving forward, of course, it is important to bear in mind that minimizing losses is by far the most critical component in investing and trading. Not only making money, remember this, it's not only making money, all right? You must know how to minimize your losses. By means of minimizing losses, you actually must know how to stop loss as well. By talking about stopping losses, so not only stopping loss, you must know when to actually realize your profits. Okay, you must know when to actually realize your profits. Basically, let's say, for example, you're already making money on the stock. Okay, if I may actually illustrate it for you guys, I just draw it. Let's say, for example, a stock price actually went up already. All right, it's parked right here. And then after that, the next thing you know that when it goes all the way up, your cost is over here. But you cannot be forever looking at this price over here. So what you must do over there is that as it goes up, you always have a trailing stop in that progress. Okay, I emphasize this so many times. You must have a trailing stop in the progress as you progress forward. All right. What I'm trying to say over here is that, let's say, for example, you drive a car up the slope. All right. I'm going to ask you guys a very simple question. Ask everyone a very simple question, and I expect to see an answer from all of you. If let's say you drive a car up the slope, and suddenly the car lost its power from continuing to go up. Okay. So what is the first thing you do? Will you hit the brakes or you let the car to roll down? Okay, answer, roll down or otherwise brakes inside the chat group. You hit the brake or otherwise you let the car roll down from the slope. You see, everyone will hit the brake. So why inside the stock market you all don't know how to hit the brake? All right, you must know how to hit the brakes. All right, you continue to let it roll down. Practically, you just, if I may say in the most simple manner, is actually you got beaten up psychologically already. It's like it's the ego battle after that already. It's like, no, I'm not gonna sell it. I could have sold it over here. All right, I think I repeat this so many times. A lot of you might have heard, you'll definitely hear it before. And to be honest with you, it's a constant nagging for all of you. But you guys also, to be honest, personally, you are struggling internally. You're trying to determine, should I sell? Should I close my position? You do not know. You do not know. But what I'm trying to tell you over here is that there are certain things where you master and you accepted the fact that there's no perfect way out of it. But pretty much, if I use this method, I have been consistent so far. I have been making money. All right, I've been making money. So let's just put it this way. Let me ask you all one question. Okay, one question, very, very simple question. Okay, I need someone to do the math, or everyone can do the math for me. Let's say, for example, you take out 1,000 ringgit to invest. Okay, 1,000 ringgit to invest. Okay, and your target is 30%, 30% per annum. Now, I say 30% per annum is basically all you need to do is find one stock only. You do your homework, you just buy one stock only. By means of one stock, which means to say, you know so many methods over inside the market, right? And you know so many strategy inside the market. But let me tell you one thing, like I said, you master one or two enough already. So you use that one or two, right? Out of 970 old counters in KLCI, right? Actually more now. Recently, they got so many IPOs, and the hottest IPO is like up by more than 300%. So the thing over here is that my question is very simple over here. It is not difficult to make that 30%. I'm not saying it's guaranteed. It's not difficult to make that 30%, but all you need is just one hit and very consistent hit that you know very well. This pattern is very similar. It looks like what I've seen before. It looks like what I've learned before. And then after that, you know what's the best part? Every year, there will be one counter that is on the repetition for this particular pattern. So that 1,000, let me ask you one question. There's a difference between when you trade to make a living, and there's a difference between investing to grow your wealth. So let me ask you one question. Are you all making a living, or are you all growing your wealth? Type your answer inside the chat group. I need to see an answer from you all. KY, trust me I mean, I bet you have a full-time job This is definitely not the cari makan one. You're probably laughing over there. Okay, Tom says he trades for a living. Okay, so be it. Okay, now get the mentality right. You are actually growing your wealth more often than not. And those people that's actually trading for a living, the other thing that you must understand is that even that I have strategized certain methods for my personally, 1.5 months, I need to wait for 1.5 months to get a 30% yield. And 30% yield by means of every day is less than 1%. So imagine, let's say, for example, if your monthly expenses is about 5,000 ringgit on average, middle income, 5,000 ringgit. How much money do you actually have to put in order to make that 5,000 ringgit? So it's actually 15,000. All right, it's actually 15,000 ringgit to get that 30%. All right, within that 1.5 months. But you put in within 1 month, it's actually you got to put more, which is probably about what, 20,000 ringgit. Okay, in order to make a living out of it. All right, but that method has to be so good enough that the fail rate is probably only that 5 to 10% per se. Now, why I say fail rate 5 to 10%? Again, I emphasize over here that there is no perfect method out of it. So basically, there is bound to be chances for something to fail. And when it fails, you just have to accept it. And like I said, you have to stop loss. And more often than not, when you have mastered or actually learned very much in detail the strategy or the method, technique, or whatever you want to name it to be, I can tell you one thing, the risk to reward ratio more often is within 1:3 to 1:5. Okay? Kuma says per annum or per month. 30% per year lah. You grow wealth per month, walao 360%, Kuma. I so want to know you Let's just be realistic over here, okay? Trading as a risk. Investment has its risk, but more often than not, investing poses a lesser risk per se. Now, when I say investing poses a lesser risk per se, guys, let's just put it this way. Investing is a period of 12 to 21 months. And some people will ask me, hey, if you do technical analysis, why do you want to invest? Hey, this is where you all get it all wrong. Okay? Stocks that are fundamentally strong, paired with technical analysis, allows you to buy during the accumulation period, which is not the lowest. but it will have the lowest average per se. All right. And at the same time, it allows you to sell at the highest average per se. Okay. The word average is being used over here. It's not a point A to point B per se. It is a journey. Okay. It is a journey. So remember that. Theo says, but nowadays better to do quick trade. See money, take money. Yeah lah, 3 months ma. All right. So basically, even for me, also, it takes 1.5 months. But you know what's the best part? I just sit down and just relax only. I don't have to actually every day like sit down 9 to 5 in front of the computer, see whether can or not. And then my full-time job, I'm so busy with it. I don't even have time to look at the market. What I do is probably like, I do like what I tell you guys already, 4:30. You know, I turn it on at 9 o'clock. First 1 hour, last 1 hour. I do my homework after 7 o'clock and that's it. And I keep emphasizing this over and over again. This is how I do it. This is how I share. You all can share with you guys how you can do it. And it's pretty much up to you per se. All right. So are we clear about this? If we are clear, type the word clear. I can't get more than enough nagging from Wong already lah. Wong has been nagging me this forever and ever. Okay. Desmond, you've been following the classes for so long. Does the nagging works? Does it work? Yes, it works. Because it's ingrained at the back of your head already. Okay. I'm happy that you all make money. I would like you all to, make even more, but come from the perspective of growing wealth, try to be. But because trading more often than not, if you have another full-time job, no lah, trust me lah. Even trading, trust me, when the frequencies are high, the chances of you making mistakes also is very high. Unless you're so good to the point that your analysis is so consistent and your strategy, the moment you look at something, you straight away immediately know it. Okay, you straight immediately know it. So basically, again, I think a lot of you actually have already, seen certain things that I have emphasized over and over again. And more often than not, you kind of know and catch how the way I actually analyze the stocks. Okay. All right. So moving on forward. Can I move forward? If I can move forward, type the word can inside the chat group. And Yip says, correct, between 1 to 3 months can earn more. Yeah, that's provided if you're consistent with your strategy and your technique. Okay, good. So then I move forward. Now the next slide. Okay, what is moving average? Now, moving average is a simple technical analysis tool that smooths out price data by creating a constantly updated average price over a selected period of time. So, moving average is currently the most flexible, applicable, and widely used technical indicator in the stock market, and it is also the most convenient and easy to construct method. So, everyone is exposed to moving average. Everyone know what moving average is, but my question over here is that when you learn moving average more often than not, is this like exactly how I started out on technical analysis about moving average, where we look so much into detail, where when you look for the death cross, the golden cross, the bullish crossover, the bearish crossover, the double crossover method, the triple crossover method. And we are so emphasized on this, we've forgotten about the whole bigger picture of what actually the grand scheme of picture is about the trend of the particular asset in terms of its pricing or the index per se. Okay, so it's always about the bigger picture. All right, it's always about the bigger picture. So therefore, don't just get engrossed about the golden cross, the death cross, this and that and everything, but you need to see the whole bigger picture of everything. And that's what technical analysis is all about. So moving on forward, like I said, I would like to cover comprehensively what a stable indicator is all about. Again, it might take more than 5 classes. Okay, I might need to extend it because I need to ensure that everyone understands what it is. Okay. Even the other day when I conducted chart patterns, I just spoke about it very much in detail. And I think a lot of you actually agree at the end of the day, the class has to be conducted another day. I can't even finish that one session, the amount of information that I actually shared with all of you. All right. So it's not because I'm lengthy per se, but I see a need in order to give an illustrative explanation of things so that everyone's understand it better. Some people understand it better in terms of words. Some people understand it better in terms of diagram. All right. But I need to ensure that everyone in the class actually is moving in the same pace. Don't forget that classes, technically speaking, you all paid for it because you bought the software, and it is a lifetime subscription per se. And this is where the benefit is in that process. All right. And you guys continue learning. And sometimes, more often than not, it's good to come back for these kind of classes because it refreshes your memory. You say, yeah, the day I made the mistake, you see what? I've forgotten about the basics of all the basics. Okay. So